presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Chuck Knox. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We have the Dow down 65, Nasdaq's off 30, S&Ps are off 6.5, gold contract down $12, trading at $1,091 an ounce. Silver down 4 cents at $14.74 an ounce. Platinum flat at $9.77 an ounce. Light sweet crude down $1.71, trading out of $49.16. We'll go through that oil market. Oil market, folks, looks like it's going to go a lot lower. Pretty wild. Bonds. They refuse lower price. You get the 10-year up 2 ticks, 126.09. 30-year up 21 at 152.31. King dollar. King dollar can't handle higher price. You had it up about 380 today. You're at 274 right now. It had failed yesterday. Bottom line, we're at 97.70. King dollar wants lower price. Euro is up 27 right now, trading at 109, and the yen is up 18 at 124.07. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so if we bring up the SPY, we take a look at the SPY just on the daily basis, what you're going to see is that make the run to the high, couldn't handle the high, you come off the high. Bottom line, the volume on the SPY is light out here. Yesterday we did 77 million. I suspect we're going to do about 84 million, but that's still light volume coming down. Now, that being said, in the NYSE, you got a heavy volume coming in. We're going to do probably around, it's going to be close. I suspect we're going to do about 750 to 800 million. The NDX 100. Now, this is a different ballgame. And what's intriguing about this one, of course, is that this was the rocket ship. NDX 100, different ball game. We've already done 26 million in the Qs. You're coming into 29 million. The Qs will do about 32 million more than likely. We are at 112.79, and we'll see how this baby attacks the 111.16 area. The 111.16 area, folks, was the high that was generated in March the 2nd. That's a benchmark. Your larger benchmark is the first high that was generated out there, which is quite a way back. That's 106.25. That would absolutely get it in the lower range. Now, inside the NDX 100, what is moving the NDX 100 today? Now, largest mover on the way down. Well, here, I'll give you the movers on the way up first. On the way up, Intuitive Surgical is up $49 at $554. Checkpoint is up. Checkpoint Software, this is up $558 at $84. Monster Beverage is up $365 at $147, and Seagate Technology is up 89 cents at 49. Taken away from it, on the way down, Illumina is down 20 bucks, almost 10% at 217. You got Linear Tech down 256 at 40.56. ADI, Advanced Micro, is down 321 at 58, and Micron is down 87 at 1801. Dow Industrials. What do we have with the Dow Industrials? We take a look at the Dow Industrials. What you're going to see is this. Dow Industrials have 3 lower highs, 3 lower lows. That's the definition of a downtrend, folks. Dow Industrials, right now we are trading at 17,000. This is 17,847. And inside the Dow Industrials, we're down $72, which is not a huge amount, by the way. Inside the Dow, now the leader in the Dow on the way down is Apple. Apple's down $577. Microsoft is down $186. Caterpillar's down $232. And you got IBM down $247. IBM is toast. Get the peanut butter and jelly out. Putting strength into the Dow Industrials is J.P. Morgan. That's up $1. Nike is up $112. Goldman Sachs is up $196. And Home Depot is up $101. Okay. So some of the high volume stocks in this market out here today, this is what you have. Microsoft's one of them, of course. We have Intel's down 22. Baker Hughes is getting smoked. That's down 248. You get Citigroup up $1.26. Inside some of the Dow stocks, if we go, if we go put IBM up, you're going to see how this little IBM is trading out here. You get IBM down 245. We got Walmart up 41. Caterpillar's down 231. Citigroup is up $1.30. Big Blue, folks, you take a look at Big Blue. What you're going to see, couldn't handle higher price. Let's see. This is on the daily. Okay. So she's breaking the swing, breaking it with volume on the daily and on the weekly. She already has more volume on the weekly. We're at Wednesday, right? She's breaking the 162.12 area. We're at 160.58. That sets up a run to the lows out here, which is the 149 area. So it's going to be intriguing. Watch this baby shake out. Linear Technology, LLTC. This is an equity that we were short in Market Insights. Closed it out today. And what you have is this. So check this out. This is another equity that, what do you think it did? Guess what? Right down to the high volume swing point from October 14. This came off the high of $49, traded to $39 today. The low of the high of the October 2014 level is $44.33. The low is $37.56. Bottom line, it's going to basically build more cars to get into that area. You know, that October level, folks, of 2014, pay attention to it. It's a big number, and inch by inch, the market is running down into those levels. So you can expect, you know, more downdrafts out here. The market and the bulls were fighting like crazy out here today. There's no two ways about it. You know, when Apple's only down $6, that's nothing. That's like insane. Here, let's go over to Apple. Apple's going lower, but I want to show you something on Apple. So you stay right there. We'll be coming right back. Dow's down 82 right now. Nasdaq's off 37. S&Ps are off 8. And you can expect lower prices right into the close out here today, folks. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And folks, as you come over to our website at TFNN, you're going to see right in the top of the carousel, our man, Mr. Larry Pesavento. He is going to be doing a workshop. It's next Monday night. It's going to be from 5:30 to 6:30 Eastern Standard Time. This workshop specifically, folks, is going to be on what Larry is looking at for the best trades setting up in August. Now, the workshop is for his subscribers. He has a great newsletter. It's Fibonacci 24/7. He sends out charts 24 hours a day showing you what is happening in the marketplace. Phenomenal type of newsletter. Bottom line is that you can come and test drive Larry's newsletter. The test drive, if you're doing it the first month, would be $48.50. That comes with a money-back guarantee. The following month, the newsletter is $97. Bottom line, you can test drive it for $48.50. You like it, great. You keep it. You go on. You don't like it, you get your money back. Either way, you can get into his workshop next Monday night, folks. And if you can't make it, the workshop live, we have great technology. It'll be on your page for an additional 30 days. So check it out on the front page of TFNN. Now, let's get over and we take a look at this market for a second, because we have, let's see where we're going into this close here. So we have quite a way into the close. It's going to be one of these deals that maybe turn off the machines, Mortimer. So when we take a look at, if you take a look at the NQs first, what the NQs are doing is that they are coming into the lowest swing point from this morning, from 1204 actually. That is 2605. Right now we're at 2611. As they just sold these babies down, they sold them down with a little juice here. You know, that is not some retail trader coming in there, because they just sold these things down like in a heartbeat, 10 NQs, which, you know, which is a good number, which is $200, by the way, okay, per contract. So what I expect you're going to see here is this. It's going to try to build some cause to actually break out this 605 level. You know, we've got to, on the open, we were at the 588. You know, we'll see whether they can bust this baby down. We go over to the S&Ps, the E-minis, and what you're going to see inside the E-minis, I expect you're going to probably see the same thing, because most of the time, yeah, you do. Most of the time when an operator, folks, is hitting 1 futures, they're hitting all of them. That's how this thing shakes out, and sure enough, they did. So they're going to build some cars. The E-minis just went down 3 handles. That'd be 3 points. The E-minis, the low of today on the E-minis is 2102.25. That was on the open. What it had done, however, is that at noontime at 12:40, it got to 2103.75. Now, I expect the same thing's going to happen there. They're going to try to ram it down there. And this is why. So check this out. You know, when you go through good trading markets and you have the traction like this bull has had, when you start rallying, you know, people have got rewarded on a continual basis buying those dips. When we rallied, folks, this morning, and we rallied very quickly. When you do something like that, after you've been down, so and I'm talking, what I'm talking about here is investors and traders in general. Because what happened is this. Last night, okay, when the numbers came out, you had the futures about where the futures were down 14, we're down 8, okay? But bottom line, it made up some of that last night. The NASDAQ futures are right where they were last night, down 50. Overnight, the overnight session, you actually had the Dow down about $1.50, and you had the NASDAQ futures off about 65, and the S&Ps were down about 12. Okay, when you have something like that, and then you open in the morning, and when we opened in the morning, this market had a decent rally. You know, bottom line is that the Dow almost went positive. Let me just see actually what it did. So if we take a look at the Dow, so in that context, this is what ends up happening. This is where I'm getting to. So the Dow got to, 919, 60 points. Yeah, so we were only down like $10. So what happens there is that as folks come on and say, okay, man, it's going to rally. We're going to basically negate the red again. We're going to go green. And when that happens is that you have people, you know, whether not bulls or bears, just traders, that get in the market, right? Then what happens is this. Now what happens is this. As we're coming into the close, this is where the big game comes on. And what the game specifically is as you come into the close is there is folks that bought into it. They don't want to stay overnight. And now they're just hoping whatever amount of bread we can get back, I want to get back. So what you're hearing off me is that even on an intraday basis, this wouldn't be investors now. This would be strictly intraday investors because the investors won't sell, unfortunately. But there's plenty of prop shops out there that bought into this. They will sell out at the end of the day. That is what is going to put more selling pressure onto this market, you know. And that's something, folks, that is not necessary. You really can't teach that. You have to do it. I've been in those positions many times. Okay, that's what you're hearing out here. That's kind of how it goes. Because what ends up happening is that, you know, you're in them for a day. It's like, okay, c'est la vie. You start again tomorrow when you're in the wrong side of that position. So we'll see how this shakes out. But that's what I expect happen, and that's where I expect the selling pressure to actually come from. You know what I mean? So now, folks, let's go over to our man, Mr. Darryl Martin. And don't forget, folks, every Wednesday, Thursday, Darryl got a great show here right at TFNN, 1 to 2 Eastern Standard Time. He specializes in trading the Nadex platform. He also has a great scanner. So once you get the platform up, and the way you do that, come over to our website at TFNN. You can hit the Nadex banner. It's on the top. It's on the side. Bring it up. They'll put $25,000 of paper money into your account. And this is a great time for trading this product, folks, whether you're a bull and or a bear. Darryl Martin, what's going on?
Hey, man, how's it going?
Going great, man. You having a good day out there?
Fantastic day.
I
we had
know.
that massive drop yesterday, and then it exploded again down this morning. Then it flew right back up to the 50% retracement.
I listened to your show today. No doubt.
It was perfect.
Yes. So inform the folks of, you know, what type of trades you've been putting on because of the volatility, well, actually the yin and the yang, the bull or the bear, right?
Yeah. I mean, I really don't care about direction right now. I'll go with wherever the chart's heading. It's too expensive to have an opinion.
Yeah.
But, you know, I mean, obviously I'm watching the charts and I'm looking at deviation levels.
Yes.
You know, we post those every day inside the scanner.
Yes.
And I got them plotted here on my chart. And so when it hits one of those, deviation levels, especially like it's the whole deviation move, then
Yes.
I'm looking to take profits and, highly likely go the other direction as well. And we had that happen twice today. Early in the morning it came down, hit right off the negative 0.5 deviation.
How cool is
and
that,
then
right?
Ran back up literally right to the positive 0.5, so a full deviation move.
Because that was quite a move this morning, man. I mean, yeah.
So so it's interesting because the implied volatility is really baked in to the price.
Yes.
So and that's one of the things about these deviations. They're not based on historical movement. They're based on the expectations of movement in the market.
Awesome.
And so they actually expanded with Google earnings and all that.
Okay, can you stay with me for a second?
Yeah.
Awesome, man. Daryl and I are coming right back, folks. You stay right there. Our phone number is 877-927-6648. Right now, you get the Dow down 80, Nasdaq's off 38, S&Ps are off 8.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Darryl Martin. The Dow Industrials right now are down 85. You get the Nasdaq off 40. S&Ps are down 8.5. And I expect you are going to see a little bit more selling coming into this closeout here. Darryl and I were talking about the Nadex platform. If you haven't test drove it yet, folks, come over to our website at TFNN. It's an awesome defined risk type of trade, and you don't need a lot of money to trade it, which makes it so cool. And, you know, Darryl's on every Wednesday, Thursday. We have a show on Friday mornings, 10 o'clock, that we are trading this vehicle. So check it out. Darryl and I right now are talking about What he does is something that's really unique, there's no doubt, inside of this, because he is not directionally trading this. What he's doing is taking advantage of strategies. So walk us through the strategies that you're doing right now.
I'm going in and, instead of really being biased, I'm more looking for reversals off of expected movements on a given day.
Which is so cool, man. I know. The scanner, folks, these deviation points, man, and I guess, that whole bell curve deal, I mean, at a probability basis, it's really cool, man. I mean, because it's like nothing is up forever, nothing goes down forever, right?
Exactly. And so, I mean, even in big up moves or big down moves, you're going to have, retracements.
Yes.
That process.
Yes.
And one of the other challenges that you have with this is you go in to do these trades, and people, they just see it going down, and your heart starts racing. You're in profit, and you want to have a point where you can tighten your stop, but not too soon.
Yes.
And also a point where there's actually a reason for reversal, not just because you think it can't keep going down or keep going up.
That's right.
And so what I found is watching these deviations is anytime I can see it bounce off of a deviation level, I get a little confirmation. I don't just buy because it hits a level.
Okay.
You do the same thing in a lot of your trades where you put them together. And so if I see some volume confirmation or just the trend in general,
yes,
it's popping up. But the strongest level, using the bell curve is just a one deviation move.
Okay.
And so I like the buy down here from earlier, and that was a pretty big drop based on Apple's release that came out. But what I really like is when it ran back up, had a 50% retracement.
It was huge. I know, man.
And so had that 50% up move, but that 50% up move was right at a one deviation move from the low.
Right.
So I'm like, okay, not only do I expect it to bounce off of a 50% move,
yes,
but it's also a one deviation move. So if I put those two things together, I probably have a really good short trade.
Right.
And then I look and go, okay, do I see volume lightening up? Yes. Do I see the market starting to trend down? Yes. And so as a Nadex trader or futures trader, go short.
Sure.
As a Nadex trader, go short. Whether you're spreads or binaries or whatever. And then you go, where do I want to target? Okay, because when you're going short, you want to have a target, especially if you have a timed contract.
Right.
And so I'm going to look at the deviation move that's closest to us, and that's going to be right at that settlement line of where it settled.
Okay.
So if I use that settlement from yesterday, then I can go in, I can focus on that and target it. And now that becomes either the binary strike I want to sell and then buy back when it hits it, or the point I want to take profit or tighten my stop on my spreads or my futures.
Right.
And so there's so many ways you can do it, but just using some very solid levels that aren't based on historical movement, because we didn't get the big movement until after that big announcement came out.
I know.
So that really big movement that you want to play off of, how can you best play it? And the best thing you can do is use implied volatility. And most option traders are they're pretty keen on implied volatility and how it works.
Yes.
A lot of traders aren't, though. They just don't know, how to use it. But it's one of the most valuable things you can have. I would say it's among the most forward-looking, plot levels you could use. Period.
Well, you know what? What's amazing, and folks, if on Tuesdays, of course, we get Kevin Hanks, the TD Ameritrade Thinkorswim.
Yeah.
There is no doubt. It's like, man, somehow these option traders, as a whole, folks, what I mean as a whole, and this is where the implied volatility comes into it, okay? The bulls and the bears, for some reason, they can get closer to where the market is going to, what the market's going to do, and just on the basis, when I say going to do, folks, it means going up or down a certain amount.
Yep.
It's a mind blower, though, isn't it? It really is. It's pretty cool, man.
Well, and that's where, like being able to trade verticals and things like that comes into place.
Right.
And any kind of premium collection strategy, which, instead of having to wait a week or a month,
yes,
you can do them every day. I mean, I'm talking about that on my show today. I was showing premium collection right there on the show.
Right.
And it's because that movement that you're talking about is built into the option.
Yes.
And what most people do, the mistake most people make is they do the opposite. They don't understand that movement price is built into the option. So if they think it's going to move 4 points, it's going to be like 4 points of premium in there.
Yeah.
Okay. So they buy it with 4 points of premium in, and they wonder why they made little to nothing when it moved 4 points.
Which is huge. No, I know, man.
They bought 4 points higher than the market.
Yeah.
Whereas if they would have sold it, which is scarier because you see a higher risk.
Right.
Okay. But if they would have sold it, then it moves that 4 points and comes on back, and they actually end up making money.
Right.
And the higher risk is not as high as it looks like because you can get out of the trade, or you can buy a really cheap out of the money binary to hedge it. I mean, there's a lot of things you can do.
And what happens here inside the Nadex platform, folks, okay? So, you know, and remember that this program is archived. You can go over this segment again, as Daryl's talking about implied volatility. And then what you have inside the platform on top of that is that you might have a little bit extra premium depending what contract you're going in, okay? Right?
Right.
Which is just a mind blower. I mean, it makes sense because, you know, the risk value is either stronger or weaker, but when that is going with you sometimes, it's like, oh man, this is kind of sweet.
Yeah, when you get the premium with your direction, it's awesome.
It is, man.
And so we've done a couple of trades on the air doing that.
Yeah.
You know, it's a pretty nice change.
Listen,
me and Tommy did a nice trade last Friday. Not this one, but the one before that.
Yeah.
We knocked in, and he called a trade out. And we were looking at it, and I mean, I put it on. I think it was like $2,000 in an hour.
Yeah, it's I know,
and
man.
That was using premium in our favor.
Yeah, premium in your favor, there's no doubt, is really a cool deal. And
the simplest way to explain that, because some people go, what does premium in your favor mean?
Yeah.
It means if the market's at 1,000, you're buying it at 900.
Right.
You're getting to buy lower than where the market's at. Or if the market's at 1,000, you're selling it at 1,100. You're getting to sell higher than where the market is.
Right.
So that gives you that edge because the market has to move against you quite a bit before you actually end up in a negative, loss as of expiration.
Exactly. Which is just, and once you do wrap your head around it, folks, you can hunt these down. Daryl's scanner will hunt them down for you. You said it's not going to tell you whether to go long or short. What it does, however, do is that once you understand what strategy you want, well, guess what? It basically will give you the best contracts at that time of day in order to trade that type of strategy, which is just so cool, man.
Yeah, it helps you find that best contract without having to do all the math, and it expedites the learning curve for you.
Yeah, big time. Listen, man, you have a great night, a safe night, and of course, we look forward to the program tomorrow and look forward to the program on Friday morning, man.
All right, sounds good.
Cooking, brother. Have a great one, man. Have a safe one. Market-wise out here, let's take a look at it, folks. Where are we at? We're at 1538, 338, and we get the Dow off on 98, Nasdaq's down 41, S&Ps are off 10. They whacked these S&Ps. Let me see if they took that swing point out. They're going after the swing point on the S&Ps intraday, and it looks to me they're coming into it. They're gonna eat this thing alive. Okay, so let's take a look at this. So your swing point on the intraday level. Yeah, we get volume behind the move. So your swing point is it 02, I think? It's 103.75. It's gonna do it because we've already done 23,000 versus 15,000 contracts. That is. It's Tom O'Brien's TFNN. Stay right there, folks. Come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's take a look at this baby. This little baby's accelerating down here. We get Dow down $111. You get the Nasdaq off 45. S&Ps are off 11.5. Man, they hit this S&P pretty good. So there's something inside the S&P that they're whacking this good. Nasdaq, the NQs are down 59 right now, and I expect. Let me just look at this for a second. So I believe that we're just taking this let's see, ESU. So, yeah, we just took it out. So if we take a look at the low that was established out here today, outside of the open, folks, this is what you have happening, is that we just came into the low intraday, and right before we go on break, I was explaining that we were getting the volume as we were breaking this 103.75 level. That level there, when we first came down, was 15,000 contracts. We just came into it with 26,000 contracts, and you get 7 minutes left on this bar. So now what you have is this, okay? The low that was established on the open out here is the 2102.25. We're going to be down there. This baby wants to get down there. If we do that correlation, we come inside just the SPY itself, and this is where the correlation as to what type of juice we're going to get into this close here. I mean, what type of volume, how they are going to push into this is going to be important. We've done 71 million shares thus far, and by the bottom line, that's still light volume. You get an inverted U that's happening. And I happen to like inverted U's. And what an inverted U is, you just take a horseshoe, turn it upside down, and what I've found is that the volume normally doesn't get going until you get right past where we are right now. If you look at that ahead, a couple little shoulders, so I expect what you're going to see tomorrow, you'll see some juice in this market on the way down. We'll get an expansion out here today, slightly, nothing heavy, subtle. Tomorrow, I expect you're going to get basically a decent expansion coming into this baby. We take that's on the ETF structures. On the indices themselves, right now we're running about 750. So the index itself doesn't have any juice either. Now the Nasdaq's a different animal. Nasdaq has the juice. The Nasdaq has already done more volume than we did yesterday. I expect you're going to see that continue. That's how this is shaken out at this particular point. We go over and we take a look at the oil contract. Well, we have with oil. Let me CLU5. Oil's getting hit out here today with volume. It's going to be intriguing watching this baby play out because we've done 321,000 contracts today. It's taken apart. It's low. Now, watch this. This is what's really sick. This is set up now to It's set up to even get below the 42 low that was established. Let me pull this up for a second. Let me see what the actual low was. CL1. This is, put this on a weekly. Hey, it's set up for the 42 is the low. It's set up for 42. The way this is breaking right now here, it's set up to actually go below 42. If I bring this back for a second, now listen, this is crazy. Let me pull this back. CLU4. This baby right now, you're breaking down with 49.10. No, CLU5. No wonder why I can't get it. Thank you. Okay, so we're down $1.77. And if I take the highs to the lows, 49, that's 50, 64, 14 is 36. This could be crazy if that's the case. Okay, so the way oil is right now, folks, oil is set up to get down, not to its low, but to 36. That is going to be crazy. That's going to be pretty wild. Gasoline, we're going to be running around with cheap gasoline also. Unleaded gas right now is at 181.73. That baby's coming down with 49,000 contracts. You're coming into 49,000, not bad. Now that low that it's coming into is 180 a gallon, or 181. You break that with volume, then you'll basically get that 170 area set up again. So we'll see how that does shake out. Inside the NDX 100, weakness versus the strength, still the same equities. It's alumina, it's the biotech that is basically leading the charge on the way down. Inside the Dow Industrials, what you have, it's Apple leading the charge on the way down. And Apple's going to be laid out at it's down 596. In fact, let me pull up Apple for you. So if we look at Apple, what you have is this. You're only down $5.95, which is nothing. This equity was trading at that level of 7 days ago. But guess what, folks? It was also trading at that level on February 11th. This is what you do have. You are pounding into this last high volume swing low out here, and the high of that swing low is 124.06. Now, the low of that low is 119. We've hit 121. You've hit it with 106 million shares out here today versus 78 million. That's on the daily. On the weekly, what you have is that you are coming down, and weekly's not that bad. You're going to need a lot more volume on the weekly. What you do have on the weekly, okay, stay with the daily first. Daily, building cause to go break it down. Weekly, what you have, and this is where it's going to get really wild, depending where we close tomorrow on Friday. But if you close on Friday at the lows, what you're going to have, if you happen to be a counselor charting or a candlestick charting, chart watcher, what you're going to have a monster bearish engulfing. And that bearish engulfing on a weekly basis goes all the way back to February of 2015. So bottom line, it's looking like there's going to be more selling that's going to continue to take place inside Apple, and they were out there all day long. If you listen to our man, Mr. Dave White, he had a great show out here today, and the correlations that he had were so cool because the correlations, folks, it had to do with Apple, as Apple's the mother lode, but it was so cool, and this is what you have to do in the marketplace to really get a much larger picture. Dave had all the suppliers, okay, and he was showing how the suppliers were getting hit. And what's so cool about that is this, is that that on a pumping basis, every executive wants to keep their stock up. They want to keep Apple up. Can't blame them, okay? When you put that together, though, with all their suppliers, and you see their suppliers getting hit in an extraordinary way, bottom line, what is that? That is a huge heads up, folks, that lower prices are coming at us in a big way, you know. And so don't forget, our man, Mr. Dave White, he's on every day, 2 o'clock Eastern Standard Time. You get it right on your cell phone, TFNN.MOBI. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow. Down 91. NASDAQ is off 39. S&Ps are off 9.5. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is off 93. You get the NASDAQ off 41. S&Ps are off 9.5. And our man Dave just put this up in the den. So let me go over some of these for you because this is pretty intense. So these are the suppliers for Apple, the iPhone. INVN. That little baby is trading, let's see where she is. She's trading at $12.98. She's down 4%. SWKS, that Skyworks, that, man, these got crushed. That's trading at $99.72. That's down 4%. AVGO, that is trading $129.44. That's down 3.8. NXPI, that's trading at a price point of 90.11. That's actually done pretty good. That was down to 86. So that's pretty good. That's still down 2.4%. BRCM Broadcom down 2% right now. That's trading out here at 51.80. Qualcomm is down 1.5%. And then after the close out here tonight, we got a lot of numbers after the close again. So this is going to be wild watching this whole thing shake out, because what we do have, let's see, where you are there. Thank you. Ooh, look at that. I like this. Okay, so after the bell out here today, this is what we have. You have Altera coming out, American Express, Cheesecake Factory, Cirrus Logic, Las Vegas Sands, Newmont Mining, Qualcomm, SanDisk, Texas Instruments, Tractor Supply, United Rentals. Now, what you will see, it's going to be interesting watching the chips, those Altera, the Xilinx, and see where they can shake out. American Express has been having a hard time. Bottom line, with the rest of the credit card industry has got so big right now. And American Express, when they lost Costco, they lost quite a bit. Newmont Mining, of course, the gold companies, that's going to be a big one to see just where they stand. In Cheesecake Factory, that's going to be, of course, in the restaurant space. Texas Instruments is in the computer space in a big way. So we'll watch how this whole thing shakes out. What we are definitely going to have out here is a lot of action after the close, as we did last night. There's no two ways about that. There's real action that's happening. Now, as I was just speaking there, you just had another counter trend bounce. The S&Ps just went from down 10 to down 7.5. Let me see what's happening there. We're down $8 right now at the 106 level. So this little baby, it made to the 03 level. You're at the 06 level. We'll see where it shakes out. Bottom line is that you're still going to have lower prices, and we'll see if, in fact, the volume comes in. As I said a little bit earlier, you have the volume in the NASDAQ composite. The composite, we're going to come in with about $2.2 billion. Thus far, we don't really have a lot of volume in the S&Ps. It's going to be, I suspect, going to be 800 million, but that is not what I suspect you're going to get tomorrow. Tomorrow, these inverted U's, folks, you take that horseshoe, put it upside down. These inverted U's, so it goes like that. When it comes to that right shoulder on a chart, for some reason, then all of a sudden it just goes, shoo. It just opens wide. Everything expands on the way out, and you really get some traction on the way down. Now we have summer trading, so we're only going to have, realistically, tomorrow to get juice in this marketplace, because even if the market goes down tomorrow and the next day, if you don't get juice tomorrow, we'll have light volume on Friday on the way down. Summer in the market on the Friday. Bottom line, that's light volume. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming back at 4 o'clock, 4:05 to be exact, with lots of numbers for you. Dow Industrials down 79 right now. Nasdaq's off 38. S&Ps are off 8.5. We are going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Peter Ustinov. The point of living is to believe the best is yet to come. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow down 68, NASDAQ off 36, S&P's down 6.5, gold contract down $11, trading at $1,092 an ounce. Silver off 3 cents at $14.75 an ounce. Light sweet crude down $1.73 at $49.13 a barrel. The oil market, folks, bottom line, not only looks like it's going to go to the 42. So the 42 is the last low that was established out here. The way it broke down today, this thing is can set up to go to $35, which would be total mind blow, but that's where it's set up. Bonds. The bonds refuse to basically get to lower price. You had the 10-year up 2 ticks today, 126.08. 30-year up 23 ticks, 153.01. They're both going for their higher swing points. King dollar is up 214 ticks, 97.64. Now, King dollar couldn't handle the swing point yesterday. Bottom line, came off it with volume. Was up 470 ticks today, couldn't handle that price. Down, well, it's up 214. Bottom line, King dollar wants lower price. Euro down 16 at 109.16. And you get the yen up 12 at 124.01. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. This is what you have. We take a look at the SPY. What you're looking at in the SPY is this. Pull that baby up. Okay. The SPY today, we're trading at 211.29. You did 83 million shares. Now, 83 million shares is not a lot of shares, folks, okay? It was an expansion of volume, but in order to get follow through to lower price, tomorrow you're going to need more volume, expansion as we go low. I expect that's what you're going to see, but bottom line, that's what you're going to need. Inside the Dow Industrials, you did have volume come in at the close out here, so bottom line, you do have an expansion of volume as the Dow Industrial is running into lower price. NDX 100, what we also had inside the, not only the NDX 100, but inside the composite, the NASDAQ composite, you did come down on juice. We've done 33 million shares, coming into 29 million on the way down. We're trading out at 112.62. The swing point to get back inside the lower range is approximately, well, it's $1.50 lower. Today we're down $1.29. After the close out here, we have Qualcomm come out with numbers. Qualcomm is trading out at, well, let's see. Qualcomm closed at a price point, COM. Qualcomm closed at 64.19. She's trading at 64.70. This stock's not going anywhere, folks, except down. This is the number on Qualcomm. So they are doing $1.4 billion in spending cuts. They're cutting 15% of their workforce. That's always a problem, folks. That's the bottom line. So we'll see where this whole thing does shake out. We got a lot of numbers coming out after the close for you. The next one out here, FFIV. Let's take a look at FFIV. FFIV closed at 118. That's trading at 125 right now. That's got some action underneath it. So let's see what they have to say. This is F5 Networks. Okay, so they see, let's see, the September quarter. Well, let me get you the numbers first. So their net was $93 million, $93.2 million. Their estimate was $1.60. They came in with $1.67. Their revenue was up 10%, $483 million. That's got a nice bounce. Well, let's see if it's a bounce or just that it wants to go higher. So 118 to 126. That's where F5 went. I see. Yeah, it already came off the highs with some juice. Okay, so we are right back up at those highs. We put this on, let me put this on a monthly basis for a second. Let's see. First, we'll put it on a weekly first and see what we're shaking out. So weekly basis. Oh, I see. Yep. Okay, so here's the downdraft, folks. When this came down in January, it was vicious. The high of that downdraft was 127. Come down to 15 million shares, went from 127 to 106. That's all it's doing is bouncing right back into that area once again. That's pretty intense, man. That is intense, no doubt. No two ways about that. That more likely is a dead cat bounce coming right into that area. Crush, CRUS. This is Cirrus Logic. Cirrus Logic, let's see. So let's put this on a 10-minute also. Cirrus Logic, CRUS. They're getting some numbers out here. That closed at $30.50. That's trading. That was down $1.60. Now it's up $2.60 coming into the close. But there's, oh, look at this. There's no life for Cirrus Logic. Wait till you see this. This is an ABC down. This is pretty cool. It'll be a complex ABC down. But what it did today is that it took out the B point, took it out with volume. We went down with, we had 3.3 million shares, taken out the price point of 30.53 with 2.2. What you have after the close here is that you're going to, we'll probably just fill in that gap. 33.33. 33.33 gets you just over that high. Yeah, it's the top of the consolidation. So there's not much action there also. Gold contract. Let's go take a look at gold. What gold has been doing out here, folks, is that you had that spike low Sunday night. We reached today, I believe we reached, let's look this. We're trading at the 1093. Gold had reached 1085, 168,000 contracts. So it's light volume going into it. We're so close to it, it still could get hit. The 1080 area, you know. You certainly didn't have the juice on the way down out there. Bonds. Now, let me pull up this bond market for you. When you see this bond, it's pretty amazing, folks. The bond market right now, USU 5. This baby just does not want to back down. You got over the trading range of the last week and a half. So we're at 153.01. Now, this is saying that this is going to go after 154.23. The real key, of course, is it going to have the volume to take that level out. What has happened is that as you got up to this 154.23, there's real juice. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming back with some more numbers. Dow down 68. NASDAQ off 36. S&P's off 6.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down at 68. You had the Nasdaq off 36. S&Ps were off 6. And, of course, we got our man, Mr. John Logan, with us as we do each and every Wednesday at 20 past the second hour. John kicks us off, folks, at TFNN every trading day. 8 o'clock in the morning. He's got an outstanding show. You can get that show right on your cell phone, tfnn.mobi. Now, he also has a piece of software. It's called the TAS Profile Scanner Plus, an amazing piece of software. We're going to walk you through what it does right now. You can get this piece of software by coming over to our website at TFNN, and you'll see it right under Breaking News. Under Breaking News, you'll see a TAS Profile Scanner Plus. Check it out. You can test drive it right here, right now. John Logan, what's going on?
Hey, Tom, good to be back with you.
You too.
Plenty of good shorts out there today.
It's pretty amazing.
Even in a market that's drifting higher, there are some awesome opportunities on the short side. Being a stock picker's market on the long end, the short side, it's just unbelievable situations out there.
There is no doubt. And, you know, folks, so, John, can you explain to the folks what the Scanner Plus is? You know, I know we can't do it in 9 minutes, but we can get them to listen to you tomorrow morning at 8 o'clock in the morning, and they can come over to our website, they can test it, they can look at the videos. If you can give a nice explanation.
Oh, God. How many minutes? Oh, God, this is going to be
a beautiful thing.
Difficult in that amount of time.
I know.
Yeah, well, I guess, you know, where to start is we've got an indicator on here that just, it takes a lot of juice out of us from the technology side.
Yes.
To create this. It's called our breadth indicators. And what I'm doing, I don't know if it's showing in the den or not right now.
You're showing it all over the world, not just in the den. Yes.
Awesome. Okay.
Yeah.
Okay. So what these breadth indicators do on different time frames is it lets you know what the internals of the marketplace are saying relative to our profile theory.
Yes.
And what does that mean? That means it lets you know if stocks on the whole, the internals of the marketplace in a non-weighted fashion, are imbalanced or balanced, and what those numbers really are. And what does that mean? That means that right now, for instance, on our daily breadth calculation, we're breadth negative, and we've been that way. We've been that way on the weekly. We're obviously a little mixed up on the 4 hour and the 1 hour, but that means that this market, as it has drifted higher, has really provided some opportunities to short inflection points when you can, because, you know, the odds are with the concert of the marketplace of the internals not being really cohesive with what the index is doing in general lately, which is, you know, we pretty much have gone nowhere for a long time, and we've had some decent rallies in the index itself. But, you know, the breadth indicator really tells me that I shouldn't get really that excited about buying stocks right now.
And what's so cool, folks, is that, as John just said, so we're at highs, and the weekly turn, that's a big number. You know, that's a much larger number to turn. And so internally, you have weakness that's under the market.
Yeah. It's incredible. I mean, we look at this indicator. I'm sorry, I've got the 4 hour up right now. Let me change the weekly. Yeah, for long-term investors, this is a kind of heads up, either get the cash or hedge your portfolio indicator for the guys who are really the long-term guys. And the last time we got a really good hedging signal in the long term based on this breadth indicator,
yes,
was around September 24th, I want to say, of 2014, and that lasted. We had about a 200-point sell-off, and that turned around positive again on October 23rd. Then we've been basically breadth positive on the long term since recently, around between May 29th and June 5th, June 5th. So that was the heads up that, you know, we're probably going to have a little bit of a downturn. it's not the time to buy stocks. We may get a decent pullback, but the odds are is that being long is not the thing to do, for lack of a better way of putting it. Good.
No, and what's so cool here, folks, is this. Picture this. Because we've been at highs and in a consolidation, you can make the case that, oh my God, should I be long or short? And that's what's so cool about this indicator, that it was showing that, listen, underneath its underlying weakness. So you don't have to buy or short. I mean, that's the bottom line. As traders, you can make that choice. But that indication itself is so cool, John.
Right. And what that does, I mean, we're kind of trying to get everything in 9 minutes here, but what that does, it tells me what the tide of the marketplace is doing. And Apple, Netflix, a couple other ones can lead the market up or down, but the rest of the pack doesn't really go along with that. This identifies that in a way you've never had before and tells you there's something wrong.
Yes.
And when there's something wrong, in this case, we've been just pounding the desk every morning. Let's find some opportunities on the short side that if we're wrong and the market keeps going higher, which we don't think it will, but if we find some short opportunities based on the scanner's filtering system, and what I'm doing is I'm showing stocks that are on a weekly and daily situation trading in the imbalanced area on the downside, and it identifies it for you. And we've been talking about, I hate to be so boring, Tom, but we've been talking about the same issues over and over again that were the ripe opportunities, not the high flyers where they might turn around. Things on their highs go higher, things on the lows go lower.
Sure.
That's what people out there need to really,
grasp,
embrace. Yeah. And we've been talking about the same issues. I mean, the Lowe's Corp, the Fluor Systems, some of the other ones out here. I'm just going down the list.
Linear Technology, Xilinx, Harman. Okay, they picks them all out, man. It's just pretty amazing, really.
Yeah, I mean, why would you not try to pick, stocks that are showing their hand in this type of market that, has edged up lately? We've had some decent little pullbacks, obviously. But when those pullbacks happen, as we had a week or two ago, the stocks that had shown their hand as weak relative to the scanner and the information in the scanner pulled back significantly on those pullbacks. And as the markets rallied back, these particular stocks actually that had showed their hand earlier, they're also not rallying on this rally. So that creates trading opportunities. And it also allows you to really qualify the instruments that you may be in on a long-term basis. So for instance, if you're in, let's just pick out Lowe's Corp.
Yes.
You get a rally like we had this past week. We rallied 70 points, and Lowe's Corp can't get out of its way and it's trading below profiles. This thing will let you know, allow you to put this, that it will let you know that that's a stock you may want to dump, for one thing, if you're long it. But it also allows you to see that it might be an opportunity for a short in your portfolio. And these are invaluable things. Kohl's Corp.
And let me just go back to Lowe's for a second. And Lowe's, and that's the correct name that John's using, folks. Lowe's Corp, okay, is not Lowe's, the Home Depot, Lowe's department fix-over store. Lowe's is a huge natural gas pipeline type of system, and they do own the hotels. But no doubt, the thing is getting hammered. Yeah.
Right. And, it's like, okay, well, somebody might say, well, I don't need the scanner to tell me that. But a lot of times, you will find opportunities in this scanner that are stocks that are just not trading on recent all-time lows. It will find areas that you tell it to where stocks have possibly even migrated up to what we call the bottom of our fair auction, and then that allows for really serious trading opportunities with relatively tight stops.
No doubt. Hey, listen, can you stay with us for a second?
Yeah, no problem. I'd love to.
John and I are going to come back, folks. So we're gonna walk you through this because John goes through this, folks, every trading day, and it's so cool. So check this out. You have no quote fees in this, folks. Okay, you have a piece of software that's phenomenal. You can scan the whole world, and listen, you can listen to them 8 o'clock in the morning, kicking off your day the right way. John and I coming right back, folks. Stay right there. If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD
and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got our man, Mr. John Logan, with us. Dow out here, folks, closed down 68. You had the NASDAQ off 36. S&Ps were off 5.5. And each and every trading day, folks, 8 o'clock in the morning, John kicks us off. We go from 8 to 6. You can get it right on your cell phone, TFNN.mobi. John has a great trading tool. It's a beautiful piece of software, very easy to use, folks. It's the TAS Profile Scanner Plus. You can come over to our website right here. You'll see it right under Breaking News. Just hit that banner under Breaking News. It'll walk you through it. There's videos on there. You can check it out. And right now, we are not only looking at it, and what's so cool is that he has these breath dials, and they're like speedometers, basically, on it.
Right.
And it's a very, what's so cool, John, you made it so user-friendly. It's pretty wild, man.
Yeah, I mean, that was the whole concept here, is to try to just give everybody what they needed so they can make a decision without having to do a mile of research.
Yes.
And, we've done all the work in the background here. The breadth we keep talking about. Mark Faber, if people were watching CBC this morning, the gloom and doom guy was on. And he was talking about the breadth and this and that. And, you really can't get the full picture of the information of the breadth, in our opinion, if you just look at what's up and what's down on the day or the week or whatever. You really need to see where the stock is or the instrument relative to what we call the fair auction or the balanced area.
Exactly.
If the stock's going up, that doesn't necessarily mean that everything's okay, and it's one of the things in the so-called normal breadth that's making it an outstanding, great buying opportunity. That is not the case. What we do with these breadth indicators is rank them relative to our information. And I've got up our 60-minute breadth right now.
Yes.
This is a trading system on its own.
In itself, yeah. Right.
It's incredible. You know, when the red line crosses the green line, you sell it. When the green line crosses above the red line, you buy it. And that's how easy this short-term system is. And if you're looking at something else in a little bit longer term, we've got our 4-hour system, daily system, obviously, in the weekly, which is probably the most powerful for long-term investors to really understand, should they be in stocks on the long side, and should they hang on to their portfolio long? Another thing, Tom, really, there's so many things to talk about. You know, this morning, Apple, you know, like, what do you do with this thing? It's down like tremendously. It's down 7%. And that's like 7% of $1 zillion market cap.
Exactly. Yeah.
So
it's peanuts, right?
Yeah. You can mouse over the cells. I'm on Apple right now. You can mouse over the cells of those particular time frames. And this morning we were saying, okay, we're trading about 121.50 pre-market. That, by the way, is the bottom of our fair auction on our daily, which is kind of, you know,
exactly.
A little bit,
so it's not a breakdown. Yeah.
So it's not totally a breakdown yet. We haven't had a weekly close. Obviously, today's Wednesday, to clarify where the long-term damage is. So this morning we were saying, you know what, you can't sell this right now.
Right.
You got to step in more than likely if you want to do a trader's type bounce and put stops below 121.50 based on your appetite for risk. And all I did, again, to you know, keep it simple, stupid, whatever, is mouse over this cell, look at that number, and understand that's a battle point. You know, we've also got the ETF rankings in here. We've got the indices on a global basis where you can rank them relative to breadth in a heat map fashion. In a way, you're not gonna get this information anywhere else. But if I go to our ETFs, I can put it on our 1-hour breadth, and I can look to when sectors are turning.
That's amazing.
And having technical damage, or, you know, actually showing some green shoots, if you will.
Sure. Yeah.
Relative to these sectors, and then you drill down into it. Here's the XLE. I'm hitting it, and as you can see, a constant sea of red. But you've got some opportunities. The Marathon Petroleum Corps of the world, Phillips 66, not the worst thing in the world to be long. And you've got the red light, green light situations in the XLE to clarify what's strong and what's weak relative to our information. It's just as simple as it gets, really.
It really is. There's no doubt about it. And folks, the way you can get it, come over to our website at TFNN, right under breaking news. Hit it right under breaking news. And of course, don't forget, tomorrow morning, 8 o'clock, our man, Mr. John Logan, they'd be out there growling and prowling with you. And no matter where you are in the world, folks, bottom line, you do it right on your cell phone. TFNN.mobi. That'll get you the audio. Want to get the video, go to TFNN.com. And just hit the banner on the right-hand side. You see a banner with devices in it. Our servers are going to know exactly what type of device, phone you're on, and that baby will get delivered. Hey, so how does it feel being back in the States?
Feels good. Feels warm. feels warm in North Carolina.
That's funny. It's warmer in North Carolina than the Philippines? Or
well,
you know what?
People have this idea that the tropics are, you know, just constantly 100 degrees and humid. It's really not the case. It's in the Pacific Ocean. There's a 12,000 foot tall volcano right nearby.
That's
and
huge.
There's the beach the other way, and there's always a nice breeze blowing. And I mean, rarely does it get above 90 where I'm at. It's amazing.
Oh, isn't that cool? Okay.
Yeah, and at night it's 75 and. Yeah,
because the sun's so hot. No, that makes sense. No, that I totally get it. And when you're near the ocean anyway, it's a whole different ballgame. Even you know, it's just that 5 degrees less makes a huge difference, man.
Yeah, it's a pleasant place to be. It's a country on the upswing for sure.
Yeah,
and just amazing opportunities there. I mean, and you know, the PSE Philippine Stock Exchange is just outpacing everybody. I mean, it's just amazing.
I like that new building they're in, man. That's beautiful.
Yeah, no, it's all. And I'm carrying some cool camera equipment back with me this time to enhance that situation. Hopefully, TFNN users will be happy with that in the background there.
It's a beautiful thing. Well, listen, man, you have a great night, a safe night, and of course, we look forward to the program tomorrow.
We'll see you soon, Tom.
And we're going to see you down here soon, too. That's right. I like it.
Exactly. That's what I'm saying.
We're going to be growling and prowling. Okay, man.
Okay.
Have a great one. Have a safe one.
Okay.
Let's go over and we take a look at SanDisk, folks. SanDisk, let's see. So actually, we're going to look at Qualcomm first. Qualcomm, this is pretty intense. So Qualcomm closed out here at $64. Was traded at 66 for a point. Now it's at 63. And this is the deal on Qualcomm. So check this out, folks. I believe this is their biggest loss since 2009, I think. They come out, let's see. So when they first come out, they were making like it had some kind of a deal with another subcontractor, and they were going to save money. The bottom line is that that was the first get-go out. They were cutting 15% of their jobs, and that's what they did. But then that was at 403. Then what ends up happening at 415? At 415, they come out, and they come out that this is their worst decline since 2009. That's the bottom line. The company's going to reduce costs by $1.4 billion, including changes to executive compensation, and they'll review potential alternatives to its corporate structure. Qualcomm shares are down 14% this year. If we take a look at Qualcomm, we put this looks like actually a large ABC structure on the way down. That's how that baby is setting up. And Xilinx, XLNX, that come out with numbers. That is a confirmed ABC down. Did it today. Bottom line, it's trading lower right now. Dow closed down 68. NASDAQ off 36. S&P's down 5.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And you can expect this volatility to continue in the marketplace, folks. If we go over to Xilinx XLNX, what you're going to see with Xilinx out here, Xilinx closed out the day at 4107. She had taken the XLNX. She had taken the B point out of an ABC structure on the way down with volume. She's traded as low as 39 after the close. This is a large ABC down, too. Your A point on this is the high of the 18th of June, which is 47.22. Your B is the 41, so you get $6. Your C is 42, which sets up a 35. We did volume today of 3.8 million, taking out the 3.4 swing point. Let me bring this up so you can see how this shakes out. It's a clean ABC down. And where that's going, it's really cool when you have an ABC down, ABC up, price projection type of situation with either a high volume swing high or high volume swing low. And that's what we also have with Xilinx. What you have with Xilinx going back to the 22nd of January, you have a high volume swing low of 37.20. Now, the ABC structure, however, on the way down, you're dealing with a 35 level, okay? So the question there is that, okay, you know, where the heck is this 35? Well, where do you see this when you put this back and you put it on a weekly? When you put it on a weekly, guess what's sticking out like a sore thumb in an extraordinary way? High volume swing low from when? From October of 2014. That's where we're going, folks. The S&P's going there. The equities have been going there one by one by one. Bottom line, that's where we're going. Now, that number there, you know, we'll see, is another week, 2 weeks, whatever it is. I'll show you another one that actually hit it today. That is going to be LLTC. LLTC came off the highs of $49. Bottom line, what do we hit out here today? Today you got into $39. Monster volume, 9.6 million shares. And when you take a look at this, what you're going to see is that the October 2014 level, the high of that level is $40.27. The low is $37.55. That's where this baby wants to get into. Let's go take a look at TXN, Texas Instruments, see if they come out with numbers yet. Texas Instruments, let's see. Yep, she come out. Okay, TXN. See what they have to say. Texas Instruments, their earnings per share, 65 cents. They made 65 cents. Their revenue, the estimate was $3.45 billion. They don't see making that, or they haven't made it. No, they were shot. Oh, this is going to be interesting. This has been all over the place. This has been so. This closed at 49.30. It's at 49.81 right now. But bottom line is that their revenue also went down. You know, revenue going down, folks, is a huge problem, period. Okay? That's the way that shakes out. Earnings, no doubt they can basically, you know, manage earnings to a certain point, 1-2 quarters. Revenue is a huge number, man. When you start dealing with revenue, that's a big number. LVS, let's go take a look at Las Vegas Sands. This is an equity that absolutely has got toasted and roasted. That closed at $54. That is trading up $3 right now, 57. Let's see what they have to say, and this is going to be all about China, I expect. Let's see. So, Las Vegas Sands, which does most of its business in Macau, China, posted second quarter results that showed better margins in that Chinese gambling arena. Profit, excluding some items, fell to 60 cents a share in the second quarter. Analysts were projecting 61 cents, still down. Sales at the world's largest casino company fell 19% to $2.9 billion. Analysts expected 2.99. So this is a situation, this is pretty neat actually, this is a situation that they didn't come in with their numbers, but the market is saying, man, okay, you didn't come in with your numbers, but they're better than we thought they may have been. Now, that being said, you got to know that Las Vegas Sands has just almost got cut in half. It went from $88 down to $53. Right now it's trading at $54.97. So bottom line is that you got a bounce out there, and that bounce, bottom line has some, it doesn't have any juice in it. It's flat out just a bounce. URI. Let's go take a look at URI. This is United Rentals. United Rentals closed at a price point out here of 77. What's 10 minutes? 77.63. This is trading out at 73. So this is down $3. Let's see what they have to say. Their revenue was $1.43 billion. Their earnings were 88 cents. Okay, so here's the deal. They made. Oh, here it is again. Man, there is a slew of companies right now, folks, that are claiming that they make their numbers, but yet don't make the total revenue. And here's another one right here. So the earnings per share, the estimate was $1.75. They made $1.79. The estimate for revenue was $1.46 billion. They only made $1.43 billion. And guess what? They're going to buy back $1 billion of shares. Let's go take a look at this, URI. This is just wild when they'll do anything and everything. Oh, and look at this, to hold up a stock. With shareholders' money, mind you. So URI is off the high of 119. And, I don't know if they've been buying all the way down, but the way this is set up, let's say, put this on a weekly first. What you're going to see is that we're trading back where we were in February of 2014. We've already annihilated the October level. That was $88. So this had come down from 119, took out the 88. Now, this is an equity, folks, that took out the October 2014 level with volume. You have both. You have some of them take it out with volume, some of them don't. You don't take it out with volume, you bounce back. This is another one that took it out with volume, going lower, and there's not much hope. This thing is on a decent downdraft, big time. And this company here, I'm wondering, it's kind of interesting because this company is in the construction business, the industrial business, the commercial business. The biggest part where they make their big money are highway projects, folks. You see those signs going along the highway? That's where they make their huge amounts of money. So evidently infrastructure, we're basically not using, or they don't have as many contracts. American Express. This is going to be a cool one to watch. Why? Because, the world of American Express, you'd think that it would never end. I mean, when you look back at American Express cards, and they were actually phenomenal, right? Guess what? I remember when Diners Club cards was the best card out there, and they're out of business, okay? American Express has some challenges ahead of it. And the challenges, of course, have to do with electronic payments, have to do with PayPal, have to do with cards that are rewarding big numbers. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. And so American Express, I just finished this thought up for a second. American Express, folks, trading down $3. They beat their profit estimate. They did that by basically getting their expenses down. The estimate was 132. They made 142. The market doesn't believe it. They have huge amounts of competition. And what has happened, it just, between losing Costco and they just got ruled against, that what they cannot do anymore, which they always did, is that they can't, inside the contracts with the merchants, they can't let them know that you can use separate credit cards with less fees. Let's go to Mark in Boston. Hey, Mark, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day out there?
Oh, yeah.
Cool,
You
man.
betcha. Yeah, I just wanted to talk to you about a gold, American Eagle coin.
Yeah.
I know you used to sell them.
Yeah.
But my question is, I've never bought or sold any.
Okay.
Thinking about it, and I just didn't know how the premium might work, the spread, and all that kind of stuff.
The premium. Okay, so what happens is this, folks, is that the premiums right now, I checked on them yesterday, okay, because when you're getting near lows, which I think we are at, the premiums tend to move up slightly. Now, they haven't moved up. The premiums right now are $60 to $70 per coin, Mark. That's what they are.
Okay.
That's on the. That's when you're buying them. When you sell them, you probably get about $30 over spot. That's how that works. Now, what happens, folks, is this. This is what's pretty cool about this gold market in general. Well, you want to know this. So we're at 10.92, right? Let's picture when gold was up at the $1,700, $1,800, $1,900 level. You didn't get a premium selling them at all. At all. It was just. That's when it just, well, you might have got maybe $10, okay? But as that gets higher, the premiums will come down. And the reason the premiums come down, folks, is that there's so many more coins that are bought and sold liquid. Right now, the market is not really that liquid. So if you're gonna buy them, just make sure you're gonna hold them for a while, because that premium itself, you can see that premium is 5%.
Yeah, and typically they're going to charge about 4 to 5%.
Yes.
On top of that for the purchase. Right?
Yeah, that's right.
Yeah. Okay. There's a bank. There's a bank in Arlington that actually sells them. So.
That's good. Well, yeah. Find out what the VIG is on them, and if that's what it is, then that's awesome, man. No doubt.
Okay. Great.
Okay, man.
Thanks, Tom.
Have a great one. Have a safe one. If we go over to American Express again, we look at American Express, folks. That's trading right now at 77.80. This baby, what you're going to see is that it's been in a consolidation. It's going to go right after its lowest swing points again. It's going to be really intriguing watching this whole thing shake out, because where their competition has come in is this. So first they lost Costco. That was a huge deal, folks, huge deal. Now what has happened is that the merchant base themselves, American Express has always charged a lot more than anyone else when you're a merchant, okay? You can get that down. That's going to basically come down more. I think what's actually happening to American Express is that you have Chase out with so many different credit cards. Chase Manhattan, folks, okay? Of course, that's JP Morgan. They have so many credit cards that give monster rewards, okay? They've made all these deals with all these different, whether, you're talking hotels, whether you're talking airlines, and those reward-based cards, number one, pay some big dollars. Some of them pay 5 to 1 for certain items, pay 3 to 1, pay 2 to 1. That's the first part, but that's not the big part. The big part of the Chase cards is that the limits on them are huge. So American Express didn't have to deal with that before. Normally if you needed a big limit, you go to American Express. That's not the case anymore. In fact, it's not even close. I think that's their problem. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow. Wow! Go get them, folks.